All right, so let's begin the show. And on the Money Show today, we have this very special segment called Meet Your Fund Manager. And today, the fund in focus is Nippon India Large Cap Fund, for which I have Sailesh Raj Bhan, CIO-Equity Investments, Nippon India Mutual Fund. Sailesh, good evening and welcome to the Money Show. And clearly, you are here with us, so we have to talk about the market, and we will also be focusing on your large cap fund. But then, let's understand the market condition right now, the way you are looking at it, the way you are analyzing it, because we've seen the FII selling. You know, if we have to just go back from August, September, October, November, so far we've seen the FII selling figures have gone beyond 80,000 crores, whereas DII's buying has crossed almost 77,000 crores. So in a way, it's been neutralized. Yesterday, we saw a great number of FIIs coming in, which is why we saw the markets today also really going up. But then, there's festival which just got over, but we have the festival of election in India as well. So looking at all these triggers and changing situations, especially the FII trend, how are you reading the market, Sailesh?
See, we've nearly seen a range-bound market in terms of larger indices for the last 2 years now, plus or minus 5% kind of movement on a compounding basis last 2 years, which itself reflects the kind of current conditions we are going through. For example, the global challenges, whether it's related to the geopolitical side or from interest rates at the levels where, higher for longer kind of a thought process there. And also issues relating to, like you said, in India and locally, the election-related volatility, or I would say additionally also a little bit of crude-led pressure which would come about. So I think if you look at the construct which is there today and been there for some time now, has been the fact that global macros are not great. Indian macros are okay and improving. And growth rates are a middling or very moderate at the moment in India, though this quarter results have been reasonably okay. So given this framework and constraint, we have seen markets plus or minus 5% in the last 2 years on a compounding basis. Also, we've seen material foreign institutional investor selling. So all this leads to a fact that there is no froth, at least in larger side of the market or large cap space of the market. And that makes it fairly interesting and attractive, for a medium-term horizon. So this segment certainly appears to be sensibly priced given where the macro conditions are and where there has been significant selling, taking away whatever excess froth which used to be there in the space.
Right. So, Sailesh, now considering the kind of situation or scenario you explained, what is on your shopping list in terms of stocks and sectors?
So clearly there is a segment called which I would call the forgotten blue chips. These were the set of companies which people loved to own 4 years back, right? And these were the spaces where people said that we will never sell them forever, or buy forever type of spaces. And those large businesses today are forgotten blue chips. Virtually nobody talks about it. And, people find it the most painful or the most unloved space as I see it there. That is where I think sensible value lies. This is across large banks. This is across consumer staple businesses, though they may still be a little more expensive valued than normal. But I think their earning cycle should get better from here. So a lot of businesses, especially in the large cap side, have remained in banking, in consumer side, remained at least flat for 3 years, flat for 4 years, depending on the kind of businesses you choose. And these are high quality businesses, but are not in momentum today and hence are being ignored. So this is one space which is clearly within what's available to us is extremely or is actually much better priced and much better on a risk reward basis as we see it.
All right, so let's focus on your fund now, Sailesh, and looking at a large cap fund. And this is the time where, people are looking at large cap because the valuations are also very attractive. Well, you will discuss that in detail with us. But specific to your large cap fund, what are the kind of quality of stocks and companies you're really focusing at? Because all throughout, if you're seeing the valuations very attractive, what is the strategy? What is the sector exposure like?
Primarily our overweights on our financials, right? And then you have overweights on utilities, overweights on manufacturing and engineering businesses, and neutralish weight today on consumer staples, which is the space is getting attractive as of now. And so these are the spaces where we are overweight. The other side where we are underweight is still IT services, which is a material underweight for us. given that the near-term growth rates globally are weak and the outlook remains weak. Even after corrections, I think that space might still middle around for a long period of time. But the clear significant overweights are banks and financials, pharmaceutical spaces, then engineering and manufacturing, select businesses where there is relative sensible value, and the utilities, as we mentioned about.
Right, Sailesh, but also since we're talking about investing in large caps, along a very old debate whether to go the active way or the passive way has again surfaced, and people are really focusing on passive strategies as far as large caps are concerned. Now, what should be the strategy going ahead, since we'll be seeing large caps coming in back to flavor, and like rightly you also mentioned, the way it protects your portfolio from uncertainty. It's very important for you to have large caps in your portfolio. Not having them is out of the question. But then the question over here should be, should it be a passive strategy or an active strategy going ahead from now on?
Yeah, see, the large cap versus passive strategies, or active versus passive, has been a debate in the market for quite some time now. If you see, when the market was extremely narrow 3 years, 4 years back, it was right, and it was seeing that passives were outperforming a large number of large cap strategies. But as markets have become broad-based, you've got material alpha now available in large cap spaces. Our belief is alpha is there irrespective of capitalization, whether it's large cap, mid cap, small cap. It's about how portfolios are positioned. Are fund managers taking the right risk? Do we taking conviction calls versus benchmark or not? I think that is what determines alpha. I don't think alpha as a construct is not there in large cap and only there in certain other categories. So this is very clear. Second is, if you look at it, the large caps in India are basically mid caps in the context of global scale and size. So only 3 companies in India are in the global 100 companies in terms of market capitalization. And I don't think our economy can become larger and bigger without these large businesses demonstrating, delivering, investing, scaling, and participating in the new age technology spaces which are there. Some of the best users of technology today in India are actually in the large cap space. They are not in the disruptive small cap or unicorn space in India. They are more in the large cap spaces. So large caps themselves, one, can grow way bigger from where they are today. That is one option. Second option is also the fact that indices generally get narrowed at some points of time, leaving aside a large number of young companies with 40, 50,000 crore market caps in large cap space, which can become multi-baggers over a 5, 10, 15-year period. So the space is very spread out. Opportunity is good. Now the valuations are sensible. And like I said, alpha is a function of how you construct your portfolio versus the index. So it's got to do with more how asset managers focus on the category rather than active versus passive. This active versus passive debate has also been there on, say, online versus offline. That online will kill offline. Today offline is growing as fast as online in India. So I think a lot of these have become narratives. They work well for 2 or 3 years, but I think over the medium term, there is tremendous alpha opportunity in India in large, mid, and small cap spaces.
All right, so in a nutshell, can we also say now it's time to go heavy in large cap? Maybe if you have made profits in mid cap and small cap, it's time to maybe book some profits there and shift that money to large caps. What will you say?
So the only real sensible place today where valuations are reasonable and sensible is the large cap space, right? And these are those blue chips which have been, in a way forgotten. People have difficulty in talking about them today. So there is just no fraud. There is no excessive euphoria around those and all, and they are very, very sensible, right? If you look at it, the larger companies in India are quoting cheaper than the smallest of small companies in India today, which is a reflection of the fact that there is some dislocation of markets and opportunity emerging in the large cap spaces today. To your question, whether one should book profits in mid and small cap and move to large caps, I think clearly the relative risk reward or attractiveness of large cap space is way better than other spaces today. And I think that appears to be where sensible value lies. And hence, people can reallocate capital, if they are heavily invested in the small and mid cap spaces.
All right, so Sailesh, now since we are, just before the main Lok Sabha elections now, any specific sector that's on your radar, or, maybe a dark horse that you've been tracking but don't have in your portfolio yet, and maybe in future, few quarters down, you might want to look at this sector?
Yeah. See, where there will be sensible value emerging is where you have some disappointments which might come up in the next couple of quarters. I think tech is one space where there has been some disappointment, but I think there will still be some challenges as we get along. And there already we have seen one leg of valuation correction of 30-40%, especially in the large cap side. And you may find some more opportunity emerging in that particular space. So that is one sector which looks generally interesting. And if price corrections are very sharp, there could be an interesting opportunity to capitalize on. Consumer staples has been middling around. Earnings might improve from where we stand today, but there is some element of valuation excessiveness, a little bit of element of valuation excess still left in that particular category, even after 3-4 years of correction. And that is one space opportunities might emerge as we get along, as growth rebounds there. And these are the two areas where we think there is possibility where one could look at over a period of time.
All right, Sailesh, I think that will be all. Thank you so much for being on the show today and explaining all the nitty-gritties on the fund today and also talking about the market movement. Thank you so much. All right, it's time for a quick break on the Money Show, and post that we'll be joined by Pankaj Matpal to get all your mutual fund portfolio queries answered. But then before that, if in case you want to send us your question, we have a WhatsApp number exclusively where you can send us your questions related to mutual funds, insurance, tax, loan, anything related to your financial planning. 865-797-4571 is the number where you can send us, WhatsApp us your question. If you're comfortable emailing, you can do that as well. The Money Show at etnow.tv is the email ID where we keep waiting for your questions. See you after this break. Welcome back. You're watching The Money Show with me, Kavita Thapliyal, and there are plethora of funds available in the market to invest your hard-earned money in. But how do you assess which is the right fund for your portfolio? What are the criteria that one should look at? To help you navigate through this maze, today we have Pankaj Matpal, MD, Optima Money Managers, to answer all of your questions. Also, do not forget to send us your portfolio queries on our WhatsApp number, which is 865-797-4571. You can also email us your questions on the Money Show at etnow.tv. So, good evening and welcome to the show, Pankaj. Let's begin with Apeksha's question that we have for you. And Apeksha wants to do an SIP of 5,000 rupees monthly for 15 to 20 years. And so far, she's confused as to what kind of fund she should be opting for, or which should be her first fund, if that's the kind of investment she's planning to do for the first time. She wants your guidance, and so clearly she looks like someone who's fresh into the investment domain, okay? And a lot of times, I'm glad that she sent us her question, Apeksha. Thank you so much, because a lot of time, for what first timers do, Pankaj, is they begin with a mid cap or a small cap fund. At least looking at the mid cap and small cap frenzy that we are seeing, that's a usual and an obvious choice. But because she's come to us for guidance, what kind of strategy you think Apeksha can opt for? Because 5,000, decent amount of money to start your investment journey with.
Kavita, good evening. And see, as you mentioned, that new investors sometimes they do not take the correct decision about the investment. And when it's a choice of schemes, let me tell you, the most important thing is the factors like your objective investment, risk appetite, and investment horizon. So in this question, you can see that only she has mentioned that she wants to invest for 15-20 years, means her investment horizon is quite long. But what is the objective investment, how much money she wants to accumulate, still that is missing. But based on the information what is available, I'll say that she can invest this money in two schemes. One will be a multi-cap fund because she wants to invest for 15-20 years. So in long term, definitely diversified funds will be a better choice. So Aditya Birla Sun Life multi-cap fund can be a good choice. And another scheme can be Parag Parikh Flexi Cap Fund, which is another diversified fund and also has international exposure. So I suggest she should invest in these two schemes. And one more thing I want to add, that if she wants to invest 5,000 per month and we calculate at 12% CAGR, she can expect around 46 lakh in 20 years. But because it's a long investment horizon, I suggest she should opt for step-up SIP, where she can decide some percentage of investment. For example, if she opt for 10% increment every year. So in the same period of 20 years, she can expect around 96 lakh rupees. So 93 lakh, rather, I'll say the right calculation, around 93 lakh. So my suggestion to the new investor, they can start with a smaller amount, but with time, they should increase their SIP amount year after year. That is more important.
All right, so the choice of funds that you have recommended, Aditya Birla Sun Life Multi-Cap and a Flexi-Cap. So any specific reason why after having a specific Flexi-Cap, you suggested that she should be having a multi-cap?
Correct. See, Kavita, there is no guarantee in Flexi Cap that you will have every time all the market caps. So it fund managers will decide that whether they want exposure in large cap, mid cap, or small cap. But sometimes we see that fund managers, they take some decision based on their style of investment or their understanding, but we see that they miss some rally. So if she invests in two funds where she knows that she has exposure across large cap, mid cap, and small cap, and at the same time, she will have one fund where the choice is available with the fund manager, and she can get the benefit of that. So because the horizon is 20 years, 15 years long, in this period, if she opts for this strategy, I think it will be beneficial for her.
All right, let's move on to next question, which is from Vineet and Pankaj. Vineet wants to understand about different type of cost involved. So 1 crore corpus in 15 years with a monthly contribution of 10,000 rupees. He wants to understand what kind of a fund mix he should be having, you know, a small cap, mid cap, flexi cap, an index fund, and ETF. A 10,000 rupees investment and with a 10% annual step up is what is his plan. And considering all the criterias, you know, where the risk reward ratio, the expense ratio, the AUM, etc., what should be the strategy is what is Vineet's question.
Correct. Kavita, see, for 15 years, we know that different sectors will perform differently at the different time period. At the same time that if you talk about the market caps, we know at this point of time, we are expecting that large cap may outperform small caps. But when we talk about 15, 20 years, then we understand that all the market caps have their importance in the portfolio. And because he wants to accumulate 1 crore rupees in 15 years, so it means he's expecting around 15% CAGR. And that too, if he invest means 10,000 per month and stepping up by 10% every year, it means with the CAGR of 15%, it is possible to accumulate 1 crore rupees. So in this case, I'll suggest that he should have investment in 3 funds. One will be large cap, ICICI Prudential Blue Chip Fund can be a good choice in this category. Then one mid-cap fund, and that is Motilal Oswal Mid-Cap Fund. And also I suggest that he should consider one small-cap fund, which is Axis Small Cap Fund. So 3 funds for long term.
All right, let's move on to a very interesting question, Pankaj, which is from Shreya, and Shreya is 63 years old. And right now she has 50 lakhs and she wants to understand whether this money can be invested in lump sum in mutual funds or she should be putting this money, parking this money in fixed deposit. And she also wants to understand the kind of interest she can earn from this investment in mutual funds as well as in fixed deposit. We really don't have Shreya on the phone line because this would have been a very important discussion, not only with Shreya but also for other viewers who have this kind of money and are confused looking at the fixed deposit rates and the volatility in the market where to put the money. So also we don't know what is her status of income right now, whether she needs money, regular income from this investment or not. We don't have that clarity. But having said that, looking at the fixed deposit rate, and also Shreya comes under the category of senior citizens where you have a slightly better rate as compared to a normally aged person in fixed deposit. So Pankaj, looking at this scenario and the amount of money is 50 lakhs, how should she diversify this money across asset classes where she can make the best of equity as well as fixed income instruments?
Kavita, definitely means she should have investment across the asset classes, and fixed deposit, she should invest means some part of her corpus. The reason is that she may need liquidity as well. So say 5-10 lakh rupees she can allocate in fixed deposit, and that too means in more than one banks. If she parks that money, it will be better. But because we know that returns are not very attractive on this fixed deposit, so one choice is senior citizens savings scheme, because it's a government run scheme, and the rate of interest at present is 8.20%, which is better compared to bank fixed deposit. So she should consider this. The limit is 30 lakh rupees for one individual. But again, if her goal is whether the long term and whether she wants the regular income, that depends on that as well. But to beat the inflation, she must have some allocation in equity. So instead of investing in pure equity funds, he can invest in some balance advantage funds or conservative hybrid funds, because conservative hybrid funds will have some 10% to 25% allocation in equity and rest in debt. And when she opt for balance advantage fund, there may be higher allocation in equity. So based on her risk appetite and her need, she should divide this money, some part in fixed deposit, some part in senior citizen saving scheme, and some part must be in hybrid mutual funds. That is my suggestion for her.
All right, with that, it's a wrap. Thank you so much, Pankaj, for being on the show and helping our viewers with their financial portfolio queries today. And I'm going to leave our viewers with our WhatsApp number and email ID, where we keep waiting for your mutual fund portfolio queries. So anything, whether you want to enter a fund, exit a fund, or you want to align a fund with any of your financial goals, be it your retirement, your child's education, or buying a home for yourself. So you can WhatsApp that question. 865-797-4571 is the number. You can also email us your questions on the Money Show at etnow.tv. So places where we keep waiting for your queries, and do your life financial planning on this show by our experts. Thank you so much for watching.